This is our Forex blog for July 13th, 2011. And you really want to buy the strong pairs versus the weak and sell the weak pairs versus strong. The dollar is weak on all time frames, real-time weakness, daily, weekly, and monthly trends down. So you want to trade this against one of the stronger ones. Today the only one that had the whole every time frame trending up was the Swiss. The New Zealand also had shifted up today. It was strong on all time frames, but that doesn't mean you can't sell the dollar against whatever pair happens to be strong, like the euro. Some weakness, less strength, a lot of weakness, and then some strength. You would assume that weakness would resume, but it didn't. And so after four, it makes sense to buy the strong euro versus the weak dollar. Until the weakness came in. So you had about an hour to be looking for buys in the euro dollar. And if you were just watching this chart, first of all, notice it's above the hourly moving average. This is, basically a sign of an uptrend. So when they come down and find support at the hourly and don't break it, you might use our FX and telestop to get in. Small, very small profit. The next one, very big profit. It didn't get you out until all the way up here, actually. But even if you were looking at this, let's go back first and see, the strength showed up at 3, and the dollar was already weak for an hour before that. So 3 really was the beginning of this trend. If you started looking at this at 4 and you see this little flag pattern right here, you can use our FX and telestop as your exit method. If you bought right here, you're really risking, if you bought there at 54, your stop is at 46, you're risking 8 or 10 pips. This is a potential profit target. You might have just flat out got out of that trade there. And then when it pulled back and went back above the previous day's high, that's a decent re-entry method. And then out at the upper band here. Notice my Fibonacci retracement levels when they're above the upper containment band, also a pretty decent place, to exit the trade. One of our methods, which this does not quite appear to be one, is Elliott two-wave pullback. Usually after a market makes a big move, it'll pull back, and if it's really strong, it's going to continue up after that. But if it is not that strong, because the euro dollar has been weak over the last week, it's been down a lot, so you would expect maybe a two-wave pullback before buying. Wait for it to hit the 1.38 fib target, and sometimes it goes to the second one. Don't go underneath there, and when it starts to go back up, you get back in. This was not quite that trade, though, but just wanted to review that method. Remember the Swiss, strong on all time frames. It had its share of weakness for hours here, but especially in the U.S. session, weak dollar, strong Swiss. The longer term trend is clearly down the dollar Swiss. You want to sell it. So let's bring that one up and go over that chart. Notice the same exact thing, but on the opposite side of the euro dollar. Price is underneath the hourly, and when it goes back up there and can't break it, not a bad place to go short. You would have probably lost a little bit on that trade. Went back above, had a false breakout here, you're short. And again, one thing to keep in mind is our IntelliStops work differently live than when you bring them up after the fact. There's a lot of code in there that looks for big moves that are statistically too much. That's very hard to line up on past charts. So it probably would have got you out of this trade here somewhere around 97 versus up here. But came back up to the hourly. If you had shorted there, wait for the trailing stop to get switched, and then you had a small profit. And then this last one, just exploded down. That was an astronomical 100 pip move. And you might have exited at these fib targets. Fib targets are very likely to be the end of the move, but this was just incredibly weak. The New Zealand, also very strong on all time frames today. So using our entry methods. Basically, we have two methods. One's a nice multi-hour sideways range. When it breaks out, it's very likely to trend. And every time it makes a higher high and has a little pullback, that's also a pretty decent entry method. This one right here pretty much had a small loss right here, or break even. A lot of people are telling me they're using these trailing stops as their entry and exit only in the direction of the trend. So if it's above the hourly and it's strong, small profit, decent one, 15 to 25 pips here, 10 pips here, 10 pip loss here, and again, you never know which move is going to be the huge one. This, you're already long. 10 o'clock, some economic news in Bernanke speaking caused the dollar to get weak, and this huge move happened. But if you were focusing on buying the strong New Zealand versus a weak dollar, you had some other small wins and medium-sized wins even before the 10 o'clock. And the pound, it's very hard to trade a currency that's chopping around like this, especially when the weekly trend's slightly up, the monthly trend's down. It's just much harder. But looking at that chart, you can still use the trailing stop in the trade here, out with about a break even in here, nice profit in here, small loss. Obviously it's chopping around. Any kind of trailing stop, in fact, probably almost any system is not going to make money during choppy time. So if you might take a trade, lose, take another trade, lose, then wait for price to break out of this sideways narrow range. It's very choppy. That way you can avoid sometimes 1 to 3 losses. You still have 1 or 2 losses before you realize the market's choppy. Then when it breaks out, you're in. And you can see in this case as well, the trailing stop kept you in. You're still in, and it went up 130 pips or so. So when you realize the market's choppy, try to avoid it. And it was pretty easy with a currency meter to see, extreme weakness, a little bit of strength, weakness. Is it going to resume weakness or strength? A lot of strength here for half an hour, then a lot of weakness. Whereas with other currencies, especially the dollar, it was pretty much strong all day. The New Zealand was pretty much strong all day, and so forth.